So I'm going to get straight into this in the interest of time. I'm going to call on you, Ibrahima, as an African asset owner, working with DFIs, working extensively in the infrastructure space, to really just share your views on the emerging institutional investor public partnerships agenda and your recommendations to development finance institutions and heads of state. I think your own head of state is one of the Presidential Infrastructure Champions Initiative leaders, one of the few presidents that are really pushing the private sector agenda into infrastructure. So Ibrahima, please share your views on what our partners in the public sector and the DFI world, as well as asset owners, can really do to push this agenda.
Thank you very much. Francis is, let's say, a small AFDB mixed with private equity in Senegal, a small country. That means I'm going to talk very micro. And from this perspective, give some, let's say, feedback to you investors and asset managers. I would like to congratulate AFDB and NEPAD first for this, let's say, opportunity that they are giving to us. A lot have been done before to attract private investment in Africa. A lot have been done through, let's say, guarantee, security, let's say, closing deals. How to ease deal, how to make deal close through, let's say, all these guarantee and securitization systems. But today, the issue is not how to ease this deal closer. Today, the issue is how to increase the deal flow. Not all pension funds are going to invest in Africa, but how to attract most of them. How to give them a portfolio of assets where they can invest in. And what we see today is, in terms of recommendation for DFIs and head of states, is to go for an alignment between DFI's agenda and push them. It will be a head of state that will do the move, push them to initiating projects, having pilot projects and developing projects, and attract investors and then asset managers to refinance projects. Because today, the gap is there to how to increase the deal flow. And as an example, we are currently developing with the AFDB, let's say, what we can call a junior debt fund for renewable energy and energy efficiency. We did a small market survey in Senegal, and we see that this market is about $500 million US. It's a small market. However, when we approach it, the investors, they say, okay, we don't know the market. We need information. We need liquidity. So what we decided is we put a first layer of money to develop the pipeline and develop a portfolio of assets, and then go back, address the domestic market, domestic capital market, because otherwise, without this domestic capital market, there will not be any liquidity for you to come and invest, because at some point, you need to have some liquidity on the market. So this will be the second recommendation, develop domestic capital market. These are the two, let's say, legs where we need to, what we need to use to have you people be comfortable, right level of deal flow and liquidity on the market that will give you, let's say, the right level of information and the exit possibility that you need to come and invest. This is what from our small experience, being a strategic investor, also an asset manager for the state of Senegal, this is what I can contribute today.
Thank you, Ibrahim. I just want to stay with you just for one moment. One of the other issues that we continually hear from asset owners on the continent is the opportunity as well as the need sort of crossed with the absence of a secondary market for infrastructure investment, and the fact that perhaps African asset owners could potentially play a leading role. Now, that's caveated on the understanding that the secondary market, offers a lot of opportunity for development finance institutions and regional development banks who may need to refinance and recycle some of their assets on their balance sheets. Is that a priority in your view? Is that a view that you agree with?
It's absolutely a priority. I believe that, for example, AFDB, they have, let's say, a good quality portfolio. They are not, perhaps they might take this opportunity to trigger and initiate this move, developing the second market. And this is about building alignment between DFIs, and if you take both DFIs and states, African states, all of them, they have a good portfolio of projects and assets that can trigger and initiate this secondary market that is absolutely necessary, both to develop local domestic capital market and attract investors. We need to have this, let's say, positive loop initiated using these two main players that are the states and the DFIs.
So I presume that would address the issue of there aren't enough bankable projects in the market, we can't take early stage greenfield risk, and we really want to start with post-construction cash generative assets.
Just going back, because today, if you look at our project, you have good yield. Our toll road projects in Dakar, I would say, is above 20% yield for 25 years. You have good yields. Why? Because there is a premium to the pioneers. So these type of assets can be available in our region because of the scarcity of capital. So there are big opportunities there. Now the issue is people have high risk perception because they don't know, or even no risk perception because they don't know absolutely anything about. So we need to initiate the move, and using this local capital market that will show to others these are the information and show out some transparency on the assets and give some indicators that you will need to take your decision. These indicators doesn't exist at the moment because there is a scarcity of information because of the capital market is not running efficiently at the moment.
Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.